Hey everybody, welcome to my first video where I'm going to be going through my ETF watch list and explaining whether I'd be buying, selling, avoiding, whatever. The point is I'm just going to go through this list. Normally I think I would probably do it from the worst performer to the best, but since this is my first one, I'll just go down the list in alphabetical order for now. And I'm going to jump right into explaining how I think and how I do what I do. So starting with BITU, this is a double leveraged Bitcoin ETF. You can see it had a nice run up here and then it started pulling back and now it's falling. This is something I'd be avoiding because it's obviously stuck in like what looks like a downtrend now. By the way, of course, this is not financial advice. I'm not a financial advisor. This is really just me, having like a live diary showing what I think of the charts and how I read them. And that's kind of all there is to it. By the way, I created this cadence information indicator, and that's where these pink and blue ribbons are coming from. So real quick, if you look at the inputs, the options for the indicator, I have these EMA lengths for exponential moving averages, and I use a 5 and a 13, 5 being the fast, 13 being the slow. Those are fairly small. I think a lot of people use more like 9 and 21, but I like to have tight control over things. I like to have as close to the real action as I can see. You can see this NU, that means new uptrend, and HV means high volume. They're not exactly precise, but if they were, we'd all be making millions, but it doesn't work that way. But they do the best they can to kind of give me information, and I have alerts set up for these things so that anytime a new uptrend is formed or a high volume is formed, I'll get an alert for it. I don't necessarily act upon that. It's just kind of information to say, hey, go take a look at this ETF and see what it's doing. But in the case of BITU, I would not be touching that. So I would avoid it since it's in a downtrend. BOIL. BOIL is a natural gas ETF. These are tough to trade. They're extremely volatile. Cold, KOLD, is its inverse. And I usually look to trade that more than BOIL because BOIL is usually stuck in a downtrend. At least it has been for the most of the time I've been trading. Here and there, it does have these small uptrends, but it spends more time down than up, if you ask me. It is looking pretty good here, though. It closed at the high of the day today. Didn't have much volume, but today is the day before Christmas Eve, so I wouldn't expect much volume at all this week anyway. So if we look across to the left where this thing closed, you can see a lot of bars are either closed or opened or high or low in the same area, so that represents support and resistance. In this case, it looks like there's probably more bars beneath where the high was today and where the close. So I would call that more like support. I mean, clearly it's sort of an inflection point around 50. Anytime you have like a whole number, a price divisible by 10, you get a lot of support and resistance in that area. It's just human nature, I guess. So in this case, I would say this could be a risky buy. The uptrend is looking pretty good. Had a decent amount of volume. This is the 20-day average moving volume here, the blue line. The only thing I would say is that even though my indicator said it was a new uptrend over here, it's really more or less over here on this bar on the 17th of December. It is rising from there. We've already gotten a couple, 1, 2, 3, 4. You could argue this is like the 5th up day, even though this day wasn't. So we're already 5 days into an uptrend. I'd be hesitant to buy there because to me that's a little bit extended. I'd rather buy as close to the beginning of the trend as possible. BOIL's not one that I'd be like, oh, what the hell, I'll just take a chance on it anyway. It's high risk, high reward, but I would say, it's looking better than BITU was, but this is a riskier play. It is a possibility. I would keep a closer watch on it and see how it performs maybe the next day. So that one is, I would say, a tentative buy. Again, not financial advice. I'm only here telling you how I think. You do what you do. Your actions are your responsibility, not mine. All right, DRN. This thing, falling off a cliff. This is real estate. It seems to have kind of reached a point where it's trying to stabilize a little bit, but it really fell hard the other day. So this is an avoid for now while it's stuck down here. DRV. This is the opposite of DRN. This is the real estate bear. So this is like shorting real estate. And it is coming down off highs. It had a huge volume the other day. I don't know if that was because people were selling at the top or I don't know why. I generally don't follow the news. I feel like that's more of a distraction than anything. I really just care about the technical behavior of the chart. But in this case, this thing keeps falling. You can see that it's at a line where you could argue there's some support and resistance situation going on here. It wouldn't surprise me much if it bounced off of this a little bit because it looks like there's some support here, but I wouldn't be trying it. This thing is too extended to even think about, so that's an avoid. ERX. This is an energy bull 2x, so it's a little slower. This is hideous though. That is a really bad downtrend. It's starting to kind of get over it now, but my God, what a disaster that was. I wouldn't be touching this at all right now. It is way too far down in this downtrend. ERY is the inverse of ERX. So this is the shorting energy essentially. Had a really good run, but you can see it's like, I think it reached its peak here for now, and it's going to need to build a new base after all of this uptrend. It needs to catch its breath. Like that was one hell of a move. So we'll wait and see what happens on that. But to me, this is nowhere near something I'd be buying. ETHD. Holy volume. This has a huge volume today. It looks like it was rising and then reversed lower. And that's a very bearish signal to me, where it was up and then closed near the low. Now this thing is shorting Ethereum, so anything like that's a risky play, as it is with those things, Bitcoin and Ethereum being so popular right now. So if we look at the 5-minute chart, which I like to do here and there to see what the intraday behavior is, it was doing well in the beginning of the day, and then all of a sudden it just kind of just nosedived for a little bit there, right about lunchtime. Kind of recovered a little bit and then just fell for the rest of the day. This is an avoid. It is stuck at this downtrend. It did have this little uptrend situation. It was trying to form a new uptrend today, but it failed, so leave that one alone. ETHU, just the opposite of ETHD. So it's trying to recover and form itself a new uptrend, but it is not at a buy point yet. Again, volumes are picking up on these things though, so maybe into the new year, a lot more people will be into Ethereum, but as of right now, I would avoid this. FAS. This is a financial bull 3x. Kind of building a base here. We seem to have reached like a point where it doesn't want to fall below this level around here. It's going to probably go sideways a little bit. This is not ready to be bought yet, but it looks like it might start turning around and heading up in a little while, but nothing I'd be looking at right now. FAZ, the inverse of FAS. And this guy, oh my God, I mean, it's like the bull market made everything bearish look so bad. And this is no exception. It had a little bit of a run here, but I wouldn't be touching this with a couple of down days. The volume's picking up. There's nothing here that says it should be bought. FNGD. This is the basically the Magnificent Seven FANG stocks, but this is the inverse. This is the short side of it, which this one is, you have to have courage to trade this, because why would you be shorting the 7 best stocks in the entire market? So yeah, I would avoid this. The chart doesn't look good anyway. FNGU, this thing had a nice run for a while, and it closed near highs today, pretty much in line with this doji a couple days ago. And doji is when the close is kind of right in the middle of the bar. Basically means indecision in the market. The market doesn't know if it's going to go up or down the next day. But here, it looks like we're getting ready to kind of run up again, but again, low volume. We got a decent uptrend happening here. I wonder if it just caught its breath here and then wants to get going again. I would keep a close eye on this. It's not a buy yet, but it's looking pretty good. It looks like it's pretty strong. This very bad bearish bar just happened the other day because of the Fed meeting. The Fed opens their mouths and all hell breaks loose. It's just the way it goes. But things are looking good now. It's recovering. I would wait another day at least to get more confirmation on it. I mean, the previous day looked good too. Like this was way down low. It opened up right near the low and then closed up pretty high, almost a doji. But then today, you could even consider today the confirmation of the previous day, and you could be, if you're willing to take the risk, you could get in on this. I tend to like to try to buy as close to the close as possible, because the close is like the last few minutes of the day is the most important. I learned from some pros in the past that basically the market doesn't care what goes on to an individual stock or ETF during the day. It's all about what happens at the very end. Those last few minutes are where market makers can literally put the price exactly where they want it. And they're basically communicating to say, hey, this is what's going on with this vehicle, this stock, this ETF, this instrument, whatever. so that they can kind of be like, yeah, we're gonna run this thing. Like, anybody wants to get in on it, get in on it. I mean, I don't know their language, right? Like, if I did, I'd be making millions, like, left and right. But this, to me, is possibly a signal saying, hey, we're getting ready to make this thing go higher. But it's not a guarantee. Of course, nothing in the stock market is. So, and the low volume gives me a little bit of concern. But otherwise, I would say this looks pretty good. Now, let's move on to the next one. GDXD. This seems to have hit like a double top situation here with these two little peaks. Actually, you could argue too that this is sort of an inverse head and shoulders. You got the left side head, right shoulder coming up, but I probably wouldn't be trying to short gold right now. There's not a lot of volume on it, and this isn't one of the ETFs I trade that much anyway. This is a bull market. It's been one of the most resilient bull markets ever. So anything that's a bearish ETF, I would probably be shying away from. GDXU, this is a triple leveraged gold miners. This one looks like it kind of bottomed out here, and it looks like it wants to come up, but it's still mired in this downtrend. That's a lot of, I think it's a strong downtrend, so I would avoid. And by the way, this information that I have down here, this is part of the indicator, just shows what the average true range is. And then I have this TS, which is a suggested trailing stop, and PT, which is a suggested profit target. Now, these are huge numbers. I mean, it's saying that your trailing stop should be 18% below the buy, and profit target should be 13.31% above. I take these with a grain of salt. This is just saying basically how volatile this ETF is. So the average true range is kind of looking at how tall the bars are essentially. And this is trying to say, you don't want to keep your stops and profit targets too tight on this because you might get stopped out really easily unless you have a wide range. And going into my indicator, my multiplier for the average true range, I use 1.5. A lot of people use 2, but if I switch this to 2, these numbers would just, these numbers would just get crazy huge. 1 second, put 2 in there. And yeah, so now it's saying the trail stop should be 25%. You are out of your mind if you're gonna try to put a trailing stop that far below. So we'll cancel that, put it back to what it was. KOLD. So this thing, this is a tough one to trade. It's the inverse of Boyle, like I said earlier. It is stuck in a downtrend now. I would be avoiding this. This is very sloppy anyway. Like these things are all over the place. Like, how do you have this day is a down day, the next day it gaps up, closes at high, then the next day it gaps down again? Like, you can't make any sense out of that. So that's something to avoid. KWeb, this is a Chinese internet ETF. This guy had a nice run a while back. It doesn't get, it's kind of weird. Like, it does get a good amount of volume, but the chart looks so sparse. Like, it doesn't move a whole lot in any one direction. I would have loved to have gotten it down here when it showed a new uptrend, and you know, obviously had it go all the way up here. But right now it's basing. It looks like it's kind of leveling out. Maybe sometime into the new year it'll be worth buying, but right now it's an avoid. LabD, this is sloppy. Look, these long tall bars, like this is just such a mess. It's a tough one to trade. I feel like you might be better off being a day trader on something like this, where you might have a pretty clear uptrend situation going on. This clearly fell down a bunch too, but wouldn't recommend day trading anything. You might use it as a good way to get in on something that you might want to buy. Like if you notice down here, all this volume coming in on the 5 minute, and then the next bar, the same thing. If you were looking to buy this on the daily, you could be watching it and then wait for a pullback, see that the pullback happened, see this volume spike, get the confirmation on the next bar, and say, okay, here's the volume, here's where I want to get in. And you would have been okay, because you probably would have gotten in on this bar and you would have been doing okay, and then the price starts falling. If you were a day trader, you get out somewhere in here anyway, make a small profit. Or you could say, well, and LabD is not a good example because I wouldn't be buying this on the daily chart anyway, but you could be like, well, I bought it down here, you know, it's a reasonable price, I'm willing to let it fall a little bit. But again, this is not something I'd be buying right now. LABU, the inverse of LabD. So this is, these are the biotechs, triple leverage, of course. We've got a double bottom situation here, but it's not anything I'd be buying yet. It's got a ways to go. This is bullish though. I mean, yes, we had a huge volume here falling, but then Friday, today's Monday, and then today closing near the high. It wouldn't surprise me to see it go up a little bit more, but this is way too risky when you're down this far. You gotta wait for it to come up a little bit more before taking a chance on that. MSOX, this is weed. This is marijuana stuff. I don't know if I've ever even traded this. This thing is so volatile. I added it because it started to get more popular, but it's something it's on my radar, but it's not something I'd be trading right now. Although it does look like it's trying to build like it's a low base here, and it seems to have kind of leveled out. Not something I'd be trading. Nail, this is home builders. Huge fall, just like all the real estate stuff, but now it's another one that's kind of leveling off, but it's not something I'd be buying yet. SBIT, this is short Bitcoin. This thing just had a new uptrend today. It has a dividend payment of 0.001, which is like nothing. Interesting that it looks like it wants to have beginning a new uptrend here, even though the volume was already picking up several days ago. If you got in like, and this bar would be perfect, honestly, this one on the 18th. You can see here that this bar had huge volume. It closed a little higher than it opened, but then this one really serves as confirmation. It gapped up a little bit to open. It was a fairly strong bar. It closed at a bit of a point of resistance, I guess, maybe a little bit higher. Had great volume. Then the next day, even better. This is even more confirmation to me. And you can see the trend is starting to turn upwards anyway. So even though my indicator said the new uptrend was today, truthfully, it was really down here. I don't know any indicator that can be right on point on the day that it happens, but better late than never, I guess. You never want to get in too late. So here, it's okay. I wouldn't be thinking I could make as much of a profit on it as I would if I got in down here. This feels buyable, but again, it's shorting Bitcoin. Like, do you really want to take that chance right now when Bitcoin's like flirting with 100,000 every day? It's a tough one. Maybe if you're only planning on holding for a day or two, okay, but high risk. It's high risk, high reward. But it's another one that I'd be like, it's kind of like Boyle, where I'd be like, it's on my radar. I'd be considering it. Given that we're so close to Christmas right now, to me, it might make more sense to just wait until the new year before entering any new trades, because no one's going to be around. Like, everyone's on vacation, you know? SCO, this is oil, and this is hideous. This is just sideways, messy chop action. I've never traded this. I may never trade it. SDAO. This one's not bad, but it's kind of slow. It doesn't move a ton. Got a nice little uptrend here. This was a really strong bar. You would think that there'd be some follow through on this, but then it didn't really do a whole lot the next day on higher volume. So when you see something like this, where you get a good amount of volume, but the price didn't move significantly, that's cause for concern. And the next day, you can see it started at the high, coming down some more, not much volume. I would avoid this. SLV, this is silver. This is one I don't usually trade either. Look at these volume spikes are so strange. I don't really know what to make of this guy. I feel like this is one where, I don't know if it's the Wall Street Bets crowd or whatever. Like, I feel like this gets manipulated sometimes. Something about silver, it's weird. So I generally tend to avoid it. It's stuck in a downtrend right now anyway, so I would not touch. SOXL, I'll be honest, SOXL used to be my favorite ETF to trade. It is usually very easy for me to figure out what it's doing. But that all changed this year. I mean, look at this. It's just kind of this crazy sideways action. It plummeted for a while, which blew my mind, because usually I'm thinking like semiconductor stocks usually do so well for so long. Like, any technology stuff has been great for so long. And now we had this little uptrend coming back down. Excuse me. And it had this tiny little uptrend and then back down because of the Fed meeting. And here we are looking bullish again. There's a dividend. That's actually not too bad, 7.077. But again, it's choppy. It's really choppy. You could take a chance on it here, sure, but it's stuck at this kind of $30 level where that looks like support and resistance happening. I would want to see at least another day, another strong bar, good volume. But you're not going to get it tomorrow because tomorrow's Christmas Eve and the market closes at 1. But you never know. I mean, you could see something decent here. But it's yet another one that I would say it's not an outright buy just now, but it's behaving. It's coming around, but I would avoid for now. SOXS, just the opposite. This is shorting semis. And it's, just like SOXL, where it's just kind of chopping around. I wouldn't touch it in a bear market. SPXS, I'm sorry, in a bull market. SPXS, this is the inverse of SPYU or SPXL. This is the S&P 500 triple leverage. So we got the new uptrend here because of the Fed meeting. So that thing kind of had a nice boost from that. Yet another tiny peak above it next day. And then it's basically a bearish reversal situation kind of here. I call it a bearish collapse. It started high, then just came back down. It ended up closing higher than the low, but it's like, nah, no one really believes in the market turning into a bear market right now. Like not even a correction at this point. So avoid. SPYU. This is the first ever 4x leveraged ETF. SPXL is the 3x version. SPYU is just a little more volatile. I think they created this because SPXL and the S&P 500 day to day doesn't change a whole lot. So you get 4 times the leverage with this one. So it's one where high risk, high reward, just like most of these ETFs. And here's a good example too. If you look at my indicator where it didn't show a new uptrend until all the way over here, but you can look 1, 2, 3, 4, 5, 6, 7, 8 days prior is where it really turned the corner. Here, this long bar on August 5th, to me, this is a bullish reversal situation where it opened really close to the low and then came up, came down into a kind of a doji close. The next day, I probably wouldn't be buying it here because you never know. I mean, this thing could have kept on going down. The next day was pretty good. It wasn't all that convincing though, because it ended up going up pretty high and then coming down and closed closer to the low than to the high. That's never a good sign. And the next day, fell a bunch again. But then here, it opened higher than it closed the previous day, and then it kind of hung in there, and it's definitely a bullish situation. So this, chances are, I'd be looking to buy around here. If I was being aggressive, the volume wasn't that good, but the previous volume was. So if I was like really aggressive, this is one that I would be thinking about buying. And of course, it ended up doing quite well. I'd be out probably right here as soon as this thing starts turning downwards again. Like I don't stick around. I'm like, made my money, get out. I don't trust the market. I have paranoia about the stock market, healthy paranoia, I guess. So I tend to end up having a lot of trades with smaller percentage gains, but for compounding purposes, that's awesome. We'll get into that in a different video. So here we are with a high volume spike on this thing yesterday or Friday. And then today could have followed through. So this is another one where the S&P 500 has been so strong this year. It looks like it could keep on going. Again, I want more confirmation. This is not an outright buy. So it seems like as of right now, nothing is an outright buy, but a lot of things are setting up. So that's a good sign. SQQQ, this is the inverse of the TQQQ. So it's the NASDAQ 100. This thing is just mired in this terrible downtrend, so avoid that. TECL, a lot of horizontal situation going on here. Close near the high, not a lot of volume. To me, I think I generally just prefer SOXL to TECL. They're not the same, but they're both like semiconductors are obviously technology related. This one, it's kind of slow moving now. It's very choppy, so I would avoid this too. But again, a lot of these bullish ETFs that I follow, they have the same kind of behavior where yesterday or the last week, Friday, was bullish situation, good volume, and then today was kind of a follow through on that. So it's, again, stuff looks to be setting up. TechS, this is just the opposite of TechL, it just keeps on falling, so that will be an avoid. TMF, this is Treasury. This is a bullish Treasury, and that's tanking, so that would be an avoid. The bearish version of it, the short side, it would have been good to get in it way down here, or even before that, down in this bar here on December 11th, but it's too late now. I mean, this thing's extended. You don't want to be buying up here. Great for everyone, whoever got in it down here, but yeah, it's too far gone now. TNA, I don't know why, but small caps have been really struggling. I always expect TNA to kind of fall in line with what TQQQ and SPYU are doing, but this thing just does its own thing. And by the way, I use TQQQ, SPYU, and TNA as kind of my 3 main market guys. Like those are the ones that I can kind of get an overall sense of whether we're in a bull market or a bear market just by looking at those. So they're kind of my go-tos to just kind of see where we're at in the market. And in fact, I have a laptop that, I'm using my desktop right now, but I have a laptop that has 3 screens on it, and those are the 3 charts I have on all day long, just to see how those things are behaving. So TQQQ, doing well. Not a lot of volume today, the dividend thing. 275 is not bad. Okay, so it is kind of at this support and resistance line here around 85. And just like, I'm going to sound like a broken record, but they're all doing the same thing. You know, they're all like, hit the low, come back up. Very bullish action here, but it's not bullish enough yet. It's not something I'm saying, yep, that's a buy, but it's close to it. It's, you know, if you think you want to take a bigger risk, your money, man. I'm not telling you what to do, but it's got potential. It doesn't move quite as fast as some of the other high-flying ETFs, but it's a good one to trade. It's like, for me, it's sort of a go-to. If I know we're in like a bullish situation and we're at an area that it could be a new uptrend, this is one that I feel safe trading. It's not too volatile and it's not too slow. It's kind of just right. TCA, this is the inverse of TNA, had this crazy, it's almost like a perfect rising channel. And usually I would think with a rising channel, things would break below it. But this actually broke above it because of the Fed meeting, and it was a lot of bearish news. Hawkish talk does that. So huge volume in that, but then it hasn't moved anywhere since, and it's just kind of stuck in this sideways trend. I mean, it was up here, but now it's kind of moving sideways a little bit. I wouldn't touch that. UCO, this is the opposite of SCO. This is garbage. I would avoid that. UDAO, this is the opposite of SDAO. This is the Dow 2000, I believe. And my dog just started barking. I don't know if you guys can hear that. And I almost sneezed too, but whatever. This one's stuck in a downtrend. It's not something I would be touching. WebL, quite the run. Wow, look, this thing. If you bought it down here for around what, 16 and change, and you held on to this thing all the way up to here, let's say you got out here when this is, I mean, you almost doubled your money. So that was a hell of a run. It's not worth buying now. I mean, this is bullish though, even though it's a red bar. We had a situation where it opened at a high, fell down, and then closed out right back near the high again. Let's look at the 5-minute. So all morning was going down, had its turnaround around here, and then, you know, it was behaving itself for most of the rest of the day. It's not something I'd be buying now after all of this run. It needs to rest, but let's move by that. WebS will be just the opposite because it's the bearish version of WebL, so it's an avoid. Yang, this is Chinese stocks. These are bears. This is short, so I would avoid this. It's messy anyway. Yin, this thing, I remember seeing this. I saw this new uptrend, and I was like, I'm not going to be buying that because of the way the bar looks. It opened, hit a high, and then came back down and closed like right near it open, where it opened, even though it gapped up. So I would have been hesitant to buy that. Then the next day it came down, so I was like, yeah, that's probably not going to move. And then here it goes on huge volume. Well, back then it was high volume. By the way, if I hover over this, I can see the ratio. So the volume ratio on this guy was almost 1.87. So it was almost twice the normal volume. And then from there, it just skyrocketed. I don't know what the deal was with China at the time, but every single day was high volume. To the peak, it was 3 times its normal volume. If you were smart enough to get out here, anywhere in here, like what did it close at? Like 58. If you bought it somewhere around here at like 23, like you more than doubled your money. That was a hell of a move. But ever since then, it's been falling and been ugly, so not worth buying. ZSL, this is inverse of silver. Bullish bar here. It's in an uptrend. It's kind of messy. I don't really like it. I don't think I'd be buying this. It's got a 40 area. It looks like support and resistance area. All right, so that's it for the triple leverage ETFs. Then I do have single stock ETFs. We're approaching half an hour now, so I'll run through these real quick. So AAPD, this is Apple down, avoid. Apple up. It's doing okay. It's got a bullish situation going on. It's weird that this looks like this, because if I go to Apple's chart, it doesn't have that fall. It just goes straight up, except right here. I guess that's what that represents. So this, obviously, Apple's slow now. It's, you know, it's a big cap, but it's behaving really well because it's Apple and it usually does. Go back to AAPU. You can see a gap down here though. And it's coming up. It's got some support, but I don't think I'd be chancing it right now. MDL. This thing had a lot of volume today. 1.5 times. It's been trending down. It looks like it's trying to turn the corner now, but it's certainly not something I'd be buying right now. AMDS, great run on the short side. Falling now, avoid. Amazon, short. I would not be shorting Amazon almost ever, but especially around Christmas time, you're nuts. Amazon up. Another one that's like, okay, these double leveraged ETFs, the single stock ones, they're not doing much. Again, I tend to prefer to trade regular ETFs or triple leverage ETFs that have multiple stocks instead of just one, but I do like to keep an eye on these to see what's going on. Google sort of has this cup handle kind of thing going on. It's definitely a cup. This could, I mean, this is sloppy, but you could argue like kind of has a handle situation, but I wouldn't be buying that either. GGLS, avoid. Meta down. This is Facebook basically. No, that you don't go from this to this. Like, that's not good behavior. You close at the high, great strong bar, decent volume. To the next day, you just fall. Like, no. Excuse me. SPYU, nope. MSFT, no. Microsoft is like too slow anyway. This is newer. This is a 2x NFLX Netflix guy. Had a hell of a run here, and now it's kind of leveling off and not doing much, so I would avoid. This is a 2-time short NVIDIA. Was doing okay for a little bit, and now it's like NVIDIA starting to come back, so avoid this. It closed at a kind of a support / resistance area, but I would not be testing that at all. NVDU, this guy closed right near the high. Again, this is another one. It's like around 100 area. What do we got? Like 102 or something? Closed at 101.72, so around 102. Got some support and resistance type stuff going on here. It looks like it wants to start turning the corner. You can see too, if you look at this pink ribbon. So you got the fast EMA at the top and the slow EMA at the bottom. And filling it in is just the coloring. It'll color it pink if it's a downtrend and blue if it's an uptrend. But you can see here that it's starting to turn upwards. So that's a sign to me that, okay, we might be entering a new uptrend here. Maybe that NVIDIA is starting to come around, turn the corner, and start going back up. It certainly has kind of a bottoming situation going on here. It looks pretty good. It's kind of following in line with a lot of the ETFs where they're ready to start moving back up and out of bases or whatever. Hard to even call this a base. It's just kind of a little U-shaped thing. It's not much of anything, but given how I trade and how I would say this looks like a buy, I would probably only hold it for a couple of days. I'm not looking to make 20% off of it. I'm looking to make just a couple of percent and then get out. And yeah, I mean, this looked really good. I mean, beginning of the day, I never want to trade in the first half hour of the day. Like I said, I like to try to be as close to the end as possible. But you see something where it's like, ooh, look at this guy. It's like, it's cleaning up. It's kind of consolidating. Like, this is all ugly. But then by the time it gets over here, it's starting to behave nice. It's in this clear uptrend situation. You'd be doing all right if you bought it around here. But, you know, I'm not Nostradamus. I wouldn't have known to do that. Hindsight, of course, you know. Tesla bull. This thing had a great run. It's starting to come down now. You know what? I mean, it's bullish. It closed with the bullish thing, but it's kind of it's not in a downtrend yet, but it's trending downward. See what I mean? Where the blue ribbon is starting to turn down. So I would not be buying this right now. I'd be looking for the ribbon to turn back up. TSLS, this is shorting Tesla, which I would not be doing right now. It's just too powerful of a company at the moment. So that's the whole list. And this took about 34 minutes, which is longer than I normally would think it would take. I'd spend more time talking. A lot of times I think what I'm going to do is just go through them really fast. And if it's a no, I'll just say no. And if it's a yes, I'll more quickly describe why it is a yes. But this is kind of what you can expect on a day-to-day basis. So out of all of these ETFs, which how many I have here? 60 of them. I would say what? Maybe between 5 and 8 of them, I would say, are like potentially worth thinking about buying, but none of them are like, yep, it's a buy. So sitting on your hands is probably your best bet right now. And that's what I'm going to do. That's all I got for you now. I welcome your comments. I welcome any ideas you might have, anything that I can do to improve the channel. I'm just getting started, so I plan to be here for the long run. I plan to put these videos out every single day that the market's open, as long as I can. I'll try to let you know if I'm not going to be able to. And I also want to keep track of what I said in these videos and say, if I said that this looks like a buy, I want to know what happened the next day and the next couple of days to see if I was right. And we'll take it from there, and hopefully my track record will look great and it'll build the channel. And that's kind of what I got going on. So Thank you so much for watching. Once again, remember, this is not financial advice. I'm not an advisor, anything like that. Just sharing my thoughts. All right. Thank you, everyone. See you next time.